Hey.
Oh, it's getting pretty close.
Hey, Crystal.
Is that Crystal?
It is. Oh, hello.
Hey, Crystal, thanks so much for turning around that thing.
You're very welcome.
It worked extremely well.
Turning around. Oh, that's what I have here.
A thing. She turned around.
She turned around the lawsuit. Secret thing. Yeah, she turned around the lawsuit. That would not be me.
Hi.
Hey,
How you doing?
Good, how are you?
Good.
Okay, so it's 12:02, or 2, it's 2 now. So we have a quorum, which is great. So I'm gonna call the March 2025 annual meeting and the March general meeting to order. Nice that you all came, thank you, and thank you for your service to Hudson. Today's our annual board meeting, which is the opportunity for us to review our financial position, the work that we've done in the past year, and set some goals for the year ahead. Additionally, the New York State Authority's Budget Office has tasks to be covered and business to accomplish, which we do every year in this meeting. Today, we're going to conduct the annual meeting business first, and then adjourn the annual meeting, take a little break for some lunch, and then come back for the March session, which we'll just take a break from. We usually have our annual board picture taken after this meeting, but I decided to postpone it to next month when our shoulders and our ears will be more in position where they should be and it's warmer and prettier outside. So next month, you'll come like a class picture. Okay. Picture day. Okay, so let's begin the Hudson Development Corporation March 2024 annual meeting. First on the agenda is our yearly financial report and audit results. Our auditor, Nicole Overbaugh from UHY, is with us here today to review the results of the audit. Welcome, Nicole, for your yearly visit. Thank you for coming. I'm going to turn this portion of the annual meeting, the financial audit report, over to our treasurer, Phil Foreman, to introduce the audit, and then he and Nicole will take us through that. There is the audit, the letter, and the audit is in this blue folder for your review if you want to look at it on a hard copy. So Phil?
Terrific. Thanks so much, Chris.
Yeah.
And before we go into audit, I just want to thank Nicole and her team. We've been working together a couple of years now, and it gets easier. We understand one another real quick. It goes very well. She has a terrific staff working with her. It's a thing that's got to get done. It's important. It allows people to, among other things, not only is it mandatory, but it creates a sense of trust when we're working with the outside world, because everybody knows that our numbers are going through and we're speaking about stuff that is. So we appreciate it, and then over to you.
Thank you, Phil. So yeah, like Phil said, we have the results for the audit today. So the audit opinion is a clean, unmodified audit opinion, which is what you would expect to see. That's page 1 for those following along online.
Folks, you may have a document in your folder.
You do?
It's a thing with many pages.
That's staple.
That is the correct document, yes. So that's page 1, and that's our audit opinion, which is a clean, unmodified audit opinion, which is what you would expect and what you would want to see. In addition, we also provide a report on your internal controls, which is required under the government auditing standards. That is the last 2 pages of this document. And if we had any material weaknesses or significant deficiencies that we identified during our audit procedures, we'd be required to put them in this report. We did not have any material weaknesses or significant deficiencies, which again is what you would want to hear. We do have a couple informal recommendations that I'll go through with you at the end, which is in our other letter and the other document.
Which is also on the back of this in your folder. Okay.
But those are not at the level to rise to a significant deficiency or material weakness that requires us to put them in the actual report. So that's good news. If you go to page 3, which is your statement of financial position, essentially your balance sheet, you'll see the balance sheet year to year is very consistent, not a lot of changes. As you know, there wasn't a ton of activity for the organization during 2024. Your main efforts were trying to purchase the J.L. Edwards School, which ultimately you withdrew that offer. But during 2024, the focus really was on that, and there's some additional expenses that we'll see on the next couple pages when we get there. But overall, very consistent on the balance sheet. Your total assets decreased about $125,000, really just a result of the loss that you experienced during the year, which we'll see on the next page. And the same thing on the net asset side, a decrease of about $110,000. So that decrease of about $110,000 is what you'll see on page 4, your statement of activities. If you look towards the bottom of the page, the change in net assets there in the third column is the negative 110,165. So when you look up above, you'll see, you had very limited revenue for the year. You have some contributions and grants that come in, but those are really related to the fiscal sponsorship agreements that you have. So it doesn't really support the organization because essentially you get those in and then you're passing it along to somebody as a result of that arrangement. On the expense side, when you compare the expenses year over year, you'll see your total expenses this year were the $258,000 versus $151,000 last year. If you flip to the next page, you can see this is your statement of functional expenses that breaks out the expenses by function and natural classification. So you can see the main driver there is really just your professional fees, where this year it was $164,886 versus the $28,447 last year. And that was just all related to the J.L. Edwards project. Everything else is very consistent. The grants that you disperse for those fiscal sponsorship arrangements are showing up in the program column in the grant line. And then just to summarize again on page 4, your investment return for the year was about $100,000, which is very consistent with the prior year. Last year was about $107,000. The rest of this document is basically our footnotes, and they basically just roll forward and carry forward year over year. There's not a lot that changes. The only thing I wanted to draw your attention to was on page 13, note 6. That is where we describe the J.L. Edwards transaction and what occurred during the year. So the board should just make sure they have read that and they feel comfortable with what we've included there. But I believe Phil did take a look at that, and hopefully it's representative of what transpired. If there's any comments, we can make a change before we finalize these.
Note 6 here, okay.
Yes, the third paragraph is what describes the J.L. Edwards activity.
Right.
That's really what I wanted to call out in the financial statements. Is there any questions? So then the second document in your folder is what we refer to as the required communication letter. So this is a letter that we're required to provide at the conclusion of our audit procedures. Most of it is just standard language that we have to, just let you know about at the end. At the bottom of page 2, we list uncorrected and corrected misstatements that we identified during the audit. So the first section lists 3, at the bottom of page 2, 3 items that we identified that were differences that we could have adjusted, but they were immaterial to the financial statement, so we passed on them. They're not significant. They're just something that we have to include in this letter to let you know about. One is just because your lease, the payments escalate over time, and technically under the lease standard, you're supposed to record them what's called the straight line method. So you would, take the total lease payments over the term of the lease, and you would calculate what the average is over that period of time. We don't do that because the impact is $1,500 each period. It's not significant where we feel that's necessary. And then the other 2 were just some cutoff errors, professional fees that, you got the invoice for late in the audit process. Yes. It wasn't worth going back and adjusting.
So this explains it, so we're cool with it.
Yes, yep, everything's cool.
Everything's good.
Everything's good.
Okay.
On the next page, page 3 at the top, those 3 adjustments listed at the top of page 3 are things that we did identify during the audit that we actually did book and are reflected in the final numbers. So we always help you with your depreciation entry. So that first entry is just posting the depreciation for the year on the fixed assets. The second one is the adjustment for the right of use asset and lease liability, which is your lease for the space. On Under the lease standard that went into effect a couple years ago, you actually put an asset on the books and a liability on the books for the entire lease term. So we just assist you with that. That's not a big deal. And then the third bullet there was you had some donated professional fees related to JL Edwards. So the person who donated the services estimated it at that $1,700. And technically, full accrual accounting requires you to record a revenue and expense for those in-kind donations. But again, it wasn't material and we ended up booking that, so it's not a big deal. Finally, at the bottom of the page, this is what I was referring to earlier, just a few informal control deficiency recommendations to bring to your attention. So for the journal entries, best practice is always that if there's journal entries being posted by the bookkeeper, somebody should be reviewing them and there should be documentation of their review. So, you guys have so little activity. I'm sure Phil's looking at things and he's, blessing it. It's just more the documentation of making sure there's an actual sign off on the journal entry and it's maintained for audit purposes. When we come in, that's what we're looking for.
So that could be a digital signature.
It could be a digital signature. It could be some kind of log where he says, I reviewed this on this date and he signed it off. Just something to support that he's reviewing it.
A log would work. QuickBooks sort of, but not efficiently keeps track of a record. When I go through the ledger items, it shows a cumulative sum. I can click that.
Yeah.
And it'll demonstrate review, but I don't know that's recorded, so I could definitely keep a log of that.
Yeah, the problem with QuickBooks is it doesn't, a lot of other accounting softwares will let you actually sign off on something in the system, right?
Doesn't appear
QuickBooks
to.
doesn't let you do that, so that's why you kind of have to do it outside of QuickBooks and just keep a log or sign
Can
off
do.
on something.
We'll do that.
Okay.
The dual signatures comment, we encountered one check that we looked at that was over 5,000 and it didn't have the dual signatures, and that's your policy that if it's over 5,000, you have two signers on the check. So
The complication on that is people move away from paper.
Yeah.
Including us. Basically, we're paying 90% of what we pay through the QuickBooks e-checks.
Yeah.
And we gotta figure out how to master a dual signature on that. The workflow is typically triggered. Well, let me start from the top. The notion of a disinterested person is not a signer. We don't have that kind of staff.
right, I know.
Basically, Christine picks up the checks or the incoming mail. She and I do a triage. Basically, she keeps the good stuff. The bad stuff goes to Phil. As as stuff that has to get paid. Phil takes it home.
Yep.
And works it through our bookkeeping system. There's no paper on a lot of this stuff anymore that would represent even a facsimile of the dual signature.
The other option is to not require dual signatures. You could change your policy and you could still have two levels of approval that you just document.
That we do,
Elsewhere.
and it's documented by email.
Yeah.
So you may just want to consider changing your policy then if it doesn't, you don't have to have this dual signature over 5,000, that's just your policy, so.
Okay.
I understand. So I think there is no case in which a bill that would fall into the category of not being a recurrent expense or pre-approved expense. There's no case where there's not a memorandum from Christine to Phil.
Yeah.
And a memorandum from Phil to Susan Ventas to pay. So
Yeah, there's an email
we
chain
can figure
of
out how to cover that.
Yeah, right now with the level of activity, I think that's fair to not, have the two signatures on the check as,
Right.
if you grow and then you have, staff and you can segregate things differently, then it's different.
Okay, we'll make those changes, thank you.
And the last comment was just related to segregation of duties because technically, because Chris is picking up the mail and there may be a check in that mail that you pick up and you're an authorized signer, technically you shouldn't be the first one to get that check because you could theoretically endorse the check and bring it to the bank and cash it, right? Because you're an authorized signer.
Yeah, I never thought of that, but yes.
Interesting.
So
Good.
the best, segregation of duties would
Would be
be
to turn it all
somebody,
over to Phil.
Well,
Not
no, he's an
me.
authorized signer too.
Oh, wait, give it to you.
Give it to me and
Nick.
then I'll get somebody to sign.
Just drag somebody in off the street.
Yes, exactly.
I mean, the best thing is somebody who's not an authorized signer is the person getting the mail, and they would be stamping it for deposit only before it goes to somebody to deposit it. But, you know, you guys have limited people, so
We don't have a stamp, that's for
we
sure.
But we
understand that.
really don't per se collect the mail, it's
It's set up
delivered here.
on the
It's delivered,
steps. Yeah.
but even on the
And it's left
steps.
on who's ever going.
But
up to
today's a
the
good
office.
example. I did open the mail because I opened the mail.
Yeah.
And then there wasn't a check in there, but last week there was a check in there, so I
Right.
gave it to Phil.
Right, so
So
that's,
that's the thing you're talking about.
exactly, so you could have, you know, if you wanted to be facetious, you
Yeah,
could
no,
sign that
I'm gonna
check,
go to
bring it to
jail.
the bank, and cash it, and no one would be the wiser, right?
Okay.
That's the concern, that's the
Duly
risk.
noted.
Understood.
We can do that.
So that's it, that's,
Thank you.
that's our report, and I wanna thank Phil, and Susan for all their assistance during the audit, and, like I said, we'll issue these this week so that you can file it on time for Paris, and then you'll
Does
be all set.
anybody on the board have any questions about the audit that they need explained or dimensionalized? Do we need to vote on this audit in this meeting to approve it?
I believe you.
We do, okay. So I'm gonna ask for a motion to approve the 2024 UHY audit as presented.
I make that motion.
Paul, as second, Britt, all in favor? Aye. Any opposed? Yay.
Thanks,
Nicely
everyone.
done. Thank
And
you
just
so much.
a shout out to Ms. Van Tassel.
Susan, yay for you.
She did a great job.
Thank you. So thank you, Phil, Nicole, Susan, and everybody else that contributed to this. Is Julie Marshall on our Zoom?
She's probably gonna work.
No.
Okay, Julie was gonna join us by Zoom, but we'll just keep going through our agenda. We'll keep her on hold. She's number C in item 3 in the finance portion.
I'm sorry, Chris, I missed that. Julie's not on there?
She's not on there,
Oh, okay.
but she said she was gonna be joining us.
Okay.
Okay, so let's review HDC's, we'll go down to 4. Let's review HDC's 2024 year. It's only natural when reviewing a year of work to want to point to the accomplishments and the successes and feel really good about the work that was done. And we had a very busy year, mission-driven year, working on the John Edwards School, as you all know. I want to touch on that. But our annual meeting also gives us an opportunity for the board to take a hard look at what we learned from the work last year and chart some strong strategies to capitalize on that work and for a greater impact in 2025. So with these parameters, let's review 2024 quickly. The board approved an offer to purchase the John L. Edwards building with a 6-month due diligence period, engaged a variety of experts and professionals to investigate the viability and expense to repurpose the building for daycare, the youth department, city or county government, and educational uses. We outfitted floor plans for the many uses we envisioned. With the results of the testing by Ambient Environmental, we asked 3 firms to bid on remediation based on that report. And board member Britt Zuckerman introduced us to a big project, well-respected contractor who toured the building and gave us a preliminary estimate for a revised build-out at no cost. In my memory, this kind of commitment to collaborating with outside experts and people hasn't existed on our board on any other project. So that's quite special in and of itself. We engaged many community members in thinking about reimagining the building and talked to local business owners, banks, school administrators, colleges, and cultural institutions for ideas and support in bringing the building back. But in the end, the board determined responsibly that purchasing the building in its current condition was not feasible for us as a nonprofit. All of our work had an impact, however. It brought greater attention to this important Hudson building, evaluated it, and shared the conditions it currently is in with the Hudson City School District as owners of that building. The work we did will hopefully be relevant to the ultimate purchase of the building by another developer in the future. But what did we accomplish? The board took on a very big idea and an even bigger project collaboratively with enthusiasm. This most centrally located mid-century building, which has Hudsonians still talking about how great it is, was one of the biggest projects this board has ever collaborated on. Also, we expanded our working capabilities by engaging many experts and community members who will now be resources for us in the future going forward. We wrote and submitted grants to bring funds into various aspects of the work that would be needed to bring back the John L. Edwards building. Our grant writing muscles have not been used in about 5 years, so we're poised to use them again to write more grants for the future. We engaged almost 100 citizens in focus groups with floor plans for the use of the building, raising awareness, most importantly, of who we are and what kind of work we can do for Hudson. We took developers, local contractors, electricians, and other specialists through the building to discuss what would be needed. And in the meantime, I speak for myself when I say I learned a lot about what is entailed in bringing a building back, evaluating it. We strengthened our relationship with the president and provost of the Columbia Green Community College and opened dialogues with the Culinary Institute of America, Bard College Development Office, and Questar. We met and engaged Child Care Connections and the families of Woodstock about childcare. These meetings gave us a much greater understanding of the overwhelming need for childcare and gave us a much better sense of the degree of difficulty in making a big childcare facility happen from a regulation and financial point of view. As a board, this was a year of big thinking. While I hope that we could bring this great building back into use, I'm extremely proud of the work that our board did together. And I feel it was a worthwhile year in good service to the building, but also to the city of Hudson. Going forward in 2025, I'd like us to set some strong goals for projects we might consider. I'd like us to continue working on solving the great need for childcare. There are real facts about the critical need in our community which we can work with to push on this mission-driven goal. But to accomplish this, we'll need to find financial partners to sponsor, underwrite, or fund our efforts. We cannot do this alone, so finding those sources will be a big part of the work we will be doing towards childcare. Before we consider other ways we might support the business and economic community of Hudson, I'd like us to consider engaging the Hudson business community and its workers in a dialogue about where they are 5 years after the pandemic. Let's hear from them in conversations about their business fitness in Hudson. Phil, Jess, and Brett have a worksheet, which they put together recently in January, I think, with questions we might ask Hudson business owners. And it will provide a great blueprint for us to begin to engage them in trying to understand what the needs are as of now in the business of Hudson. These conversations will help us be more strategic in evaluating what's important to Hudson today. We are an eccentric, creative city with a character edge that cannot be duplicated. How can we foster this? What can we do to help this continue as making Hudson the very special place that it is? Hudson has a great business fabric. And partnerships with the community and its organizations, we can do some good investigation about what was really needed. Let's find out what Hudson businesses, investors, and big organizations think are the hurdles to success in 2025. This could reveal some other very big needs that we're not even aware of that we could be focusing on. I'd also like to continue to engage Hudson people who live and work here as potential board members so we can continue to expand our knowledge and expertise in meeting our mission in an ever-evolving Hudson. Finally, we need to be thinking about our 50th anniversary in 2026. This milestone presents the opportunity for us to clarify the work that this organization has done for Hudson over 50 years. It's also the opportunity for us to be the right organization for Hudson's future. And there will certainly be a celebration party. Perhaps we can identify one project from now that we could really focus on that would be a good thing to be able to talk about in our 50th year. So with that, let's move on to the mission statement, which we are required to review in this meeting. It's in the book. The mission statement was first written and adopted in 2022, and we still feel that it remains very strong, but if there's ideas to add or subtract, this is the moment. A good mission focuses on the values and impact rather than a description of functions and processes. And it should express our purpose, the sense of direction, and the significance of the work that we do brings to people. The mission statement is there. Hudson Development Corporation is a private nonprofit established in 1976 as a local development corporation for the purposes of sustaining, promoting, and enabling business investment and employment opportunities, as well as strengthening the city of Hudson's tax base to help secure its future as a desirable place to live, work, and invest. Are there any comments on the mission as written? No? If not, can I have a motion to readopt our mission statement for 2025?
Make that.
John first, second, Nick, all in favor?
Aye.
Any opposed? The mission stands as written. And board term bylaw revisions, you all remember at our last meeting, we were talking about how our board terms overlapped in an unfortunate way. And Paul and Crystal have been working on this and are ready to talk to us a little bit about what they would recommend.
I circulated, documented everyone's place here that says proposed bylaw change as it pertains to board terms. The only change we're recommending is in section 2, paragraph 2. The above version has one line that says the remaining directors are elected to 3-year terms renewable for an additional 3-year term. To strike that out and add what you see in red at the bottom, which reads directors are elected to staggered terms of 2 or 3 years to determine at the time of nomination by the executive committee and as voted upon by the current directors. Directors shall serve 2 consecutive terms, at which time a 1-year hiatus must be taken before renewed services on the board will be considered. The executive committee shall be responsible to stagger terms accordingly to ensure continuity, and nominations shall include compliant term lengths. Questions, comments?
The one thing that it doesn't do is protect those people that are members of the executive committee that are actually running the organization right now.
That is mentioned in our bylaws, but in a separate area.
Okay. I don't have it in front of me.
Okay, but, yeah, this, yeah, that's in a separate section.
Here.
We could even add something to this section very easily, notwithstanding the foregoing, members of the executive committee shall be exempt from term limits.
Like that.
It literally could be that easy.
Okay,
Okay,
wait, look, I'm sorry, one more time?
Notwithstanding the foregoing, executive committee members shall be exempt from term limits.
And prosecution.
and what?
Prosecution. Are we gonna go full Trump?
I'm sorry, from board terms,
Shall be exempt from term limits.
from term limits.
Yes, okay, president for life.
I like the sound.
I think that's a dictator.
Well, I mean, it's Kim Jong-un.
You want to add
But
that to the minute?
I think that the way you all, if you have somebody on the executive committee that you want to get rid of, well, at your next annual meeting, you vote them off the executive committee, and then they're now subject to term limits. So you still have
Yes,
that
yes.
control over somebody not
Right.
being a forever board member.
Okay,
It works.
all right, so can I make a motion to have this change made?
Can you read it through?
Sure. Directors are elected to staggered terms of 2 or 3 years to be determined at the time of nomination by the executive committee and as voted upon by the current directors. Directors shall serve 2 consecutive terms, at which time a 1-year hiatus must be taken before renewed service on the board will be considered. The executive committee shall be responsible to stagger terms accordingly to ensure continuity, and nominations shall include compliant term lengths. Notwithstanding
The foregoing.
the foregoing, the executive committee members shall be exempt from term limits. All right.
Excellent.
So,
Oh,
a
so-
motion? Second, all in favor?
Aye.
Great.
Oh, thank you.
Wonderful.
That's great.
Well done, guys.
Thank you. Thanks, Britt.
Thank you.
Absolute power.
Excellent. Okay. So who is on our Zoom? Can we, I see Tom Okay, and Jess, hello Tom, and is Julie, signed in yet? No, okay, so we'll keep moving.
Christine, do you want me to go out and ring her and see what's up? That's not like her.
Yeah, you wanna see if she has a link?
Yeah,
I mean, I sent her.
I talked to her, I know, and I talked to her yesterday. Let me slip out.
Maybe she's having trouble with her Zoom.
Okay.
Inside the packet in your folder, you will find the 2 required documents to be signed and returned at the end of this meeting, by the ABO. One is an acknowledgement of the fiduciary duties and responsibilities as a board member. As an authority of board of directors, I understand the fiduciary obligation to perform my duties and responsibilities in good faith and to the best of my ability. It has a signature line. This is something that you can sign and just turn upside down at your seat, and we'll collect it at the end. The other required document by ABO is a confidential evaluation of board performance. This does not require a signature. This is an anonymous review of our work by you. So there's categories, and you can fill that out and sign it. That would be great. These documents then get filed through Julie Marshall. I send them to her. She files them in the ABO and the Paris report.
Good, I don't see you online. For the board.
Uh-oh.
Heard that question.
Now.
Do you wanna do the,
Yes, keep going.
Yeah.
Drive on. Ironically, in the original agenda, I had her down lower, and I thought, well, we'll just skip it. So,
Sorry, she had the wrong time. She'll be on in a minute.
okay, so we can go forward with the next item on the agenda, item D, election of board officers. Since I received no,
D is the Paris filing materials. Did you wanna do B?
I'm gonna do D. That's a different, maybe I changed it around a little.
Oh, maybe you did,
Yeah.
okay.
Okay, D, election of board officers.
Okay, good.
I did not receive anyone's bid to become an officer of the executive committee, sadly. Thank you. So the current officers are myself as president, Nick Haddad as VP, Phil is the treasurer, and Paul Barrett's the secretary. All of these individuals are willing to continue in these roles. Are there any comments about this? If not, can I have a motion to nominate the current officers to continue in their roles? John first, second. Kristen, thank you. All in favor?
Aye.
Any opposed? Okay. Thank you. Thank you for your confidence in our abilities. And thank you for not hearing me cursing at 5 o'clock this morning.
Oh, good. Julie's on.
Okay. Hello, Julie.
Oh, Julie, good morning, you're muted.
Julie, welcome. Oh, we will be not here, but thank you. I'm glad it did too. Thank you so much.